You know what I don't get? What happened to make the stock market crash?
I think it had something to do with risky mortgages.
Yeah, banks were selling bad CDOs to trusty investors. They didn't expect them to be worthless.
Here's the all-knowing Paulo to explain CDOs.
Oh, hey there. If a CDO is confusing to you, it's pretty simple. A CDO is a collateralized debt obligation, a bundle of pooled assets, in this case, mortgages, that are sold to investors. CDOs are made up of assets called tranches. Some CDOs are less risky than others, such as AAA CDOs. But banks were corrupt and were filling AAA CDOs with risky tranches, fooling investors into buying risky CDOs they thought were safe.
So CDOs are made up of mortgages? Why are they so risky?
Doesn't it have to do with who they were selling houses to?
Yeah, the banks weren't properly screening people who applied for loans, so people were taking out loans even though they couldn't pay them back, which caused inflation.
Now here's know-it-all Paulo to explain inflation.
Oh, you're back. Ready to learn about inflation? Here, we have the housing market in early 2000s when it was stable. Now, the banks have started selling risky loans that people can't pay back. Over the next several years, this continued. 2003, 2004, 2005, 2006, and 2007. The housing market was rapidly inflating. The prices of homes skyrocketed, while the purchasing value of the dollar plummeted. In 2008, the housing bubble burst. Tell them your story, Gracie.
I wanted to take advantage of rising real estate prices, so I bought as many houses and condos as I could. I didn't worry that I couldn't afford the loans, and the banks didn't care if I could either. My plan was to resell the properties for a big profit. It all blew up when the housing prices fell. I couldn't make the payments on my loans and lost them all.
Inflation did cause the stock market crash? Why didn't anyone see it coming?
I think the bank did see it coming. They had to know that their fraudulent behavior would lead to a crash.
Exactly. Someone must have known it was coming because they took advantage of it and shorted the housing market.
Shorted?
Here's the omniscient Paulo to explain shorting.
Back again? What'd you need this time? Shorting? Ah, that's simple. When you short something, you're essentially betting against it in the hopes that the price will drop. So in this case, 4 investors noticed the trend of people not paying their mortgages. While other investors were buying stocks in mortgages, these 4 investors knew the stocks would fail. So they shortened the housing market in hopes of getting a huge payoff when it crashed.
So these guys did the big short, huh? What happened to the economy afterwards?
Well, the stock market crash affected the world economy. Most of the nation's economies were intertwined, so when our market crashed, every nation with an investment in us took a hit.
So what happened in the United States?
The banks were out of money, so they couldn't pay back their investors.
So how did they get out of it?
The government bailed out big banks by purchasing assets to inject capital back into them.
What happened to the people?
Well, first of all, most people lost their jobs and in turn lost their houses. Everyone was looking for work, but there was no work for them.
What about the high-ups on Wall Street? Did they get arrested?
No, they all got away except one. The rest were sitting in their deluxe hot tubs drinking champagne while everyone else slept in their cars.
I hate economics.
I cannot say this! I cannot say
Did you get that? It was rude to talk when someone's talking.
I was coughing.
That sounds just... The government! Close your eyes.
Bailed out the big bank.
Mortgages.
Yeah, banks were selling bad. I looked at it.
The housing board.
Paulo! It was perfect!